right. Here we are. Good morning, everybody. Last set the market for 2025. Last set the market for 2025. Very cool. Matt is asking about how do I get into the Slack room. If you're a member, what you can do is you can reach out to our support staff, we call it relationship management team. You can just email them, support@thesteadytrader.com, and they'll help you out. And they'll give you a call too if you'd like to. So let's get started here in just a sec. Pretty big move in yields this morning. And then we're going to get started here in just a sec. Just want to make sure we give everyone adequate time to come into the set the market room here this morning. All right. Very good. Cool. All right. Let's get started. Again, thanks everybody for being here. Good morning or good afternoon, depending on where you are. This is our last set the market for 2025. We're actually going to shut down set the market by today, but we're actually going to continue it next year. So we are looking forward to doing that. We've got a lot of new things planned as well for the Set the Market morning call. If you're here for the first time, by the way, this is our morning call, Set the Market. I'm Serge Berger from thesteadytrader.com, and we are going to spend the next sort of 10 to 15 minutes going through the markets. This is our last one for the year, as I said, so we're going to make sure we take it right to about 15 minutes from now and address everything else that still need to be addressed this late in the year. Let me see. I wanted to start off this morning with a poll, and it looks like a whole bunch of you already took that poll. I would encourage all of you to, if you want to, take the poll. The question, if you look into the chat box here, I think it's what it's called, on YouTube, the question is, where do you think the S&P 500 will end the year in 2026, so a year from now? And it looks like 56% of you said flat to sideways. 6% of you said some sort of major bearish correction. 28% think we can have fresh all-time highs by the end of the year next year. And 11% are just being honest, right? Which is you just want to see the results. So, yeah, that's what the results are here. Okay, very good. Perfect. Well, let's get started. So, what I would like to start off with is something that we have spoken about here in Set the Market for a few months, and particularly if you're a client, a member of the Steady Trader or over at Blue Marlin on the actual investment advisory side, you know that we have a bullish theme for 2026 and multiple years forward on just basically hard assets and commodities as such. And I would like to talk about this through the lens of trend following as well. I made a separate video as well that's going to come out this morning on this very topic here to be a bit more elaborate on in a separate video as well. What you're seeing here when you look at the Bloomberg Commodity Index, and again, I've shown this chart before, but I think it's important to distinguish between commodities, equities, and other asset classes, right? So commodities tends to, once they begin to trend, tend to trend very strongly. And they can trend with lower volatility than other asset classes. Not all commodities are created equal. Obviously, a lot of them are different in terms of their volatility. But trend following, as we continue to reiterate, is ultimately where we sort of generate wealth, right? We talk about trading being sort of more of an income, kind of adrenaline rush kind of thing that makes us money here and there. But real wealth generation doesn't happen from going in and out of the market 100 times a week or day or month. It happens by staying in long trends. And, speaking of commodities and trend following and staying in long trends, you don't really have to go much further than looking at, for example, gold, right? So, we think we're going to start to see major trends. I just had an early breakfast meeting this morning with a great friend of mine to sort of, finish off the year together. And, he's having the best year of his life, actually, by just essentially being long gold and silver from a trend following perspective. And, trend following is an extremely powerful methodology that most retail investors really don't do. Most retail investors are largely chart chasing breakouts and then never capture the majority of the move. And that's largely a function of a very long bull market we've had. And people will learn over time, of course. But, trend following, and look at the low volatility. Now, gold is not a very volatile asset to begin with, so let's be clear on that. But being able to trend follow something like gold, gold is up 70% year to date. 70. You know what's not up 70%? Max 7 stocks, right? And so trend following, when a commodity begins to trend, and, again, gold and silver and other commodities are very different. Gold and silver and pork bellies or orange juice are very different things, but they have that trend following capability, right? And so, and we can do so with lower volatility along the way. Now, just like stocks, commodities too have different volatility. Different types of commodities have different volatility, right? Tesla is a more volatile stock than Procter & Gamble, for example, right? It's the same thing in the commodity space. But here's a chart that I just want to continue to reiterate. Actually, before we get to that chart, let me just once again remind you, and this will be the last reminder of this year here in Set the Market on this. And I've been pointing this out now for 9 months probably at this point. I'm just going to quickly show you guys this chart here. Where is the chart? Oh, here. No, this is the chart. So, as we go into 2026, which we are labeling the year of the Great Rotation, which basically means at the margin away from tech, right? We think there's a massive opportunity there for investors to rotate into other parts of the market. And from a market capitalization perspective, there's so much money, as I've been reiterating in the past few weeks, so much money in just one sector, tech, right? And the other parts of the sectors that are basically tech in disguise, right? Like communications sector it's basically tech. It is tech. It's meta, right? But again, you look at where the performance is coming from. It's coming from gold and platinum and gold miners and silver, and all these things are up, a lot this year. And we think this was the beginning of the rotation away from Max 7 stocks and, in general, the tech sector, quite frankly, right? And if that's the beginning, then, this is not going to be something where a lot of traders will make money from it, but capital rotation allocators, sector and group rotation type of strategies make a lot of money. We have a portfolio over on another firm we have called Blue Marlin Advisors. We have basically a play on this, and that portfolio is beating the S&P easily by quite a lot with low volatility, and we think that's just the beginning of that, right? So here's the chart that I want to just bring up one more time, and again, if you guys have questions, please let me know. But here you have, again, the Bloomberg Commodity Index, and if you take the sequencing here, and you see where the S&P 500 broke out from. So the green line that I just overlaid is stocks, the S&P 500. And if you look at where the S&P started to re-accelerate higher after consolidating from late 2021 to about January of 2024, so like 2 years, right? You can see that breakout was pretty linear except for the April V-shaped reversal. And commodities in general haven't done that. You can also look, metals and miners and all that stuff. The blue line has done the same thing delayed by about, I don't know, what is that, 2 years? Or December 2023, March, yeah, something like that. And they're now breaking out higher, and we think commodities will be the next one to go, right? So I wanted to point this out. I think this is an incredibly important point. And the reason why this is happening, and this is really important, right, is actually because of the debasement of currency, right? We call it the purchasing power erosion. One way of looking at it, and this is a little bit of an oversimplification, but one way of looking at it is by looking at the dollar index. Now, this is not the perfect way of looking at it, because you have to look, the dollar index is relative to other currencies. You have to look at the dollar index as a purchasing power unit, right? But you see it here too. You can see as the dollar began to drop sharper, you can see that stocks, and this is this year, stocks, so blue line, stocks, S&P being green line, and metals and mining stocks, so gold, all that kind of stuff, started literally V-shaping higher as the dollar continued to slide. So basically, by not being long financial assets, one would be losing even more, right? So it's not so much that stocks are going up because they like to go up and because of whatever. It's the debasement of currency trade. And I think while 2025, and I was discussing this with my friend this morning, 2025 was the year of the trader. Another way of saying it is it's a transition year. Again, I think 2026 is going to be a year of the great rotation. Again, it's already happened in 2025 that tech stocks started underperforming dramatically, but we think 2026 is going to be the year when we start to see the great rotation into many other parts of the market, right? So that could be other tech sectors, could be other sectors of the S&P, like for energy stocks, as I said before, right? And again, the commodity space, maybe emerging markets, depending on what the dollar does. So I would encourage everyone for the next couple of weeks to really take some time and think long and hard about how are you positioning yourself for 2026 and possibly for the next few years. Are you going to play the same game that has worked now for many years, which is basically buy the dip on NVIDIA, right? And that's been the right call, right? But I want you to think about what that means when that stops working, right? I think that's really, really important. So if you're a member of our different products, for example, ETF Silo Pro, where we run an actual mock portfolio on this rotation, you have a whole portfolio on that we constantly rotate in and out of, and you'll know exactly what to do. But I think what I'll say for here is that commodities as an asset class, again, I've been talking about this now for probably about a month, 3 months at least, here is probably going to be a major thesis for 2026 and beyond. So with that, we're going to leave it at Set the Market for 2025. Again, we were actually going to shut this down up until about a couple weeks ago. We were pretty firm on shutting this down for now, but we had so many people say that we want to continue to see the morning call, that we said, you know what, okay, let's just make some changes, make it more interactive. I know a lot of people have become to rely on the morning call, which I didn't realize how much that was the case. So, we don't want to take that away. So we're going to continue doing it better than ever, starting again in January. But we're going to take I think much deserved a Christmas break now, a year-end break, holiday break. Hope you guys will do the same. Again, there is a tendency for retail traders in particular for the next few trading sessions that are left to be basically constantly wanting to do something. as someone that's done this for a long time, I can tell you it's not a good time to do a whole lot. It's a better time to recharge our batteries. That's not to say there's no opportunity. It's just that understand that you're largely going to be trading against a few machines and a few other retail traders out there, right? So anyway, hope it's helpful. Happy holidays, everyone. Happy Merry Christmas, Happy New Year's, whatever else you might be celebrating. And if you are a market role, remember, we're going to see you in about 5 minutes. And very important, if you do want to learn more about this rotation, and this is really important, if you do want to learn more about this kind of rotation that we're talking about, join us in 2 hours, actually, a little bit less than 2 hours, in our session on how this sector and group rotation stuff actually works. Right, so it's totally free. You can join us get 11 Eastern, so that's 8 o'clock Pacific today. Today being Tuesday. Make sure you join us there if you want to learn more about how this works, what we think, where the next moves are, more details. Right, if you sign up for that webinar, which is free anyway, it's our weekly educational session. You're also going to receive access to our new latest ebook that we dropped about 2 weeks ago on rethinking the S&P 500, which is actually very much part of this sector and group rotation play. And that's what we're gonna do. Thank you, everybody. Much appreciated. Doug and Benito, Matt, Jeff and Bill and everyone else that's chiming in. We appreciate it. We'll see you guys back here in the new year. And again, if you're a market role, remember, we'll see you in a couple of minutes. And again, if you want to join us and learn more about educationally in our strategy session for the week, make sure you join us in Sector Shake Up at 11 o'clock Eastern here this morning. I'll see you guys there. Happy holidays, and thanks for being here.